That's
Down
fine
to
too.
anything you wanted to ask me?
I guess. So has your practice changed over the last year? Are you much busier now, slower because of the upheaval in the markets?
It's different. The fundraising is slower. After Terra Luna, things really kind of fell a lot back from there. But, there are still funds raising and there are still funds retaining and there's still blockchain venture investing and there's DeFi and staking and subpoenas.
Yeah. Well, subpoenas for sure. I mean, it's interesting you brought up Terra Luna because that's really when the world exploded on the enforcement side. Terra Luna and Celsius and BlockFi, and so it was lending platforms. Now it's staking. The SEC seems to be doing more than just barking. They're actually bringing a lot of enforcement actions. And it's not just the SEC, right?
No, you're right, Craig. So the states are also just as active on the enforcement side of things. We're dealing with clients all the time. We have inquiries, investigations. It's the state banking departments. As you know, it's also the state securities departments. And what we're seeing is while the state security departments maybe are aligned in terms of whether an offering is an unregistered security, the state banking departments are all over the map. So
That
it's
whole
tough.
question of what's a security continues to linger. And obviously, the SEC keeps saying, oh, most crypto is securities, but I don't think they really entirely mean it because if they did, everything would have to be a registered securities exchange. And yet, there really is no ability for a crypto exchange to do that.
And you haven't seen them charge any of the exchanges for operating an unregistered exchange. Even the lending platforms that were offering an exchange service got charged for the lending platform part, but not the exchange part.
Right. Even the insider trading people in that Coinbase case, it was like, we think a subset of these are maybe securities. That was a very different message than everything is.
Right. And to Kara's point, we were dealing with a settlement for a client with the states, and the states disagreed with one another. And then they disagreed with the person who sat across the hall because one was on the banking side, and one was on the money transmitter side and the security side, and they had no idea what the other side was doing.
Yeah, and the states right now, they're like introducing legislation, and every state is taking a different position, a different view. So it's really just a complete patchwork that's going to be really difficult for these exchanges to navigate compliance going forward.
So you're still forming the same kinds of crypto funds in light of all of this?
Well, again, I think it's more crypto funds continuing than new crypto funds forming right now. But we've had crypto winter before. It's sort of a seasonal event. But some of the strategies that people are pursuing heading more towards blockchain venture. But I do want to turn back to that question of securities and say, what the SEC did on that custody rule, kind of clever, right? Because there they are, they can't really say everything is a security, although they maybe would like to. But on the other hand, they'd like some regulation. So then they come up with something that says whether it's a security or not, we want you to hold it with a qualified custodian.
And I think that's going to be tough. We're going to see, I think, a lot of trust companies coming and rushing out to try to qualify as approved custodians going forward because the pool right now is not that large to hold all these assets if that rule becomes final. So
Yeah, and of course, that rule's about the registrants, right? So it doesn't pick up a lot of people on these exchanges.
It's not dissimilar. Like the DOJ has been doing this in insider trading cases where they use a different statute and they don't have to determine it's a security or not. They can still bring an insider trading case. They would do it the custody rule. But I think what you see is with the custody rule, with staking platforms, the lending platforms, all the cases that they're bringing are ones that make it look like they think they're securities and they're going after a lot of the guardrails around it to give you the same protection, which when you look at what's happening with the banks right now, as we're seeing closures and everything else and investors worried about having their deposits protected or not, obviously the crypto deposits are not protected and the investors left holding the bag.
Yeah, and I think we're going to start to see banks that are just pulling away or reluctant to deal with crypto companies. So it's going to be hard because in the crypto community, you still need these traditional financial institutions for the on and off ramps. And so I think you're going to start to see them really start to pull back.
Well, didn't they just say with Signature Bank that they couldn't sell the assets unless they agreed not to be doing crypto anymore? Right? I mean, they just made them back away from that completely.
Yeah, no, it's a big problem for those crypto clients who were using Signature or the other two banks, the Silicon and Silvergate that went down. Here we are unbanked, basically, which is a kind of odd thing when you have crypto as the alternative to conventional banking, and now the crypto clients can't get to conventional banking.
Well, don't they just say Bitcoin solves this?
You know what? There is a little bit of Schadenfreude there. There really is, because you look at it and you say, okay, well, if you were here, you wouldn't have had your assets suddenly, potentially at risk.
And so do you have, you said the funds are different. Are they trying to trade in the bankruptcy space and buying the assets out of the estates?
We certainly see some of that in some of our traditional finance distressed credit clients who are looking at these assets. But this is another place where some of the regulatory uncertainty really bites.
Well, yeah, the SEC doesn't want to be second to people having bankruptcy claims. The SEC wants to get in there, and I assume the states aren't going to be far behind.
The states have been active too in the bankruptcies, so they've been objecting to the bidders. Texas and New York were not happy with Binance getting those assets. But at the end of the day, the bankruptcy court needs to figure out how to efficiently unwind and get the assets back to the creditors, at least what they can. So,
And presumably the honest exchanges will be stronger at the end of this, I mean, when the others have cleared out.
yeah, certainly.
But part of the problem they have too with the unwind, as you said, is we have exchange where they want to return money back, either part of an SEC order or something else, and they can't just reverse the transaction. It's not like they're sending money to a Wells Fargo account, right? We had a client, they wanted to send the money back. It's like, do you want us to send it to Celsius? Right? We can't just reverse the transaction and give somebody Bitcoin to a defunct exchange that's in a bankruptcy proceeding.
Right, and what do people do with the native tokens? Are those securities, are they of any value now? Because you could rescue some of these things more easily if those things were still tradable.
Right, and then, so now if somebody's going to have a token, you can't trade it anywhere in the United States.
Yeah, but I don't know that all offshore is the solution either. I mean, we want to be a financial market.
So where do you think we're going?
I don't know. Kara, where do you think we're going?
I don't know. Hopefully to Crypto Spring, but
Again,
Certainly for the clients.
DeFi is crypto spring. DeFi is great.
I like DeFi. We'll see what regulators will probably get involved there as well, and we'll see how that will play out. Because that's kind of the whole point of DeFi is that there shouldn't be someone to regulate, but I can't imagine that they're going to allow it to really blossom and bloom in the way that the visionaries have, foresee it. And then it's who are you regulating in DeFi?
Yeah.
I feel like we've been talking about this together for 7 years, right? At least, on and off, what's going to make it. We had ICOs, right? Everywhere we've gone. And for 7 years, I've heard the SEC saying things are securities, this isn't going to happen. And yet the enforcement cases are still sort of few and far between. And there's still no guidance from the regulator. There's
And
no,
it's still a
no
real
rules.
asset class.
Right.
And people are still buying it and not just, the crypto natives.
Right. You get to a crypto winter, and yet people are still putting money into it. There's still tokens that are out there and they're trading. And
Bitcoin is up.
There's a real audience for it.
Yeah. The bank failures actually helped Bitcoin, ironically.
So we'll be talking about this again for 7 more years, trying to figure out what the regulators are going to pass a rule about this.
And if we
Figure
had
it
tax
out, right?
people here, they'd be telling us too, gee, it's very uncertain. Like DeFi, where are those transactions happening? US, not US?
Very unpredictable market. Almost as unpredictable as did I tell you I took the train today.